Well, hello folks, I'm L.A. Little and this is your daily NeoTA wrap. We take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves one question: what happened today and what does it tell us about the coming days? I do a show 4 times a week, Monday through Thursday. I broadcast at or before 10 o'clock Eastern Time. Also do a show on a Sunday. Catch that if you want the little longer term view. That's where we look at the weeklies, sometimes the monthlies, but we try to give more perspective to the larger picture than the micro. Here, we're looking for what's going to happen the next day or the next few days. And a lot of times that's important because the next few days may be big days, right? Because the market's evolving all the time. As far as evolving today, it was up. We had the industrials really leading the pack, up 0.75%. Small caps got a 0.5% gain. Then it was the S&P and then the NASDAQ NDX, which were trailing pretty badly. Elsewhere, pretty big move in the bonds here, and then also in the copper market. Outside of that, not that much of a move other than nat gas, which has been hugging the red line for a long time. So if we look at the market as a whole, it looks pretty good when you look at it this way. But when you look inside of it, it looks a little bit different. And so let's look at that difference together. And what we have here, if we pull up, well, let's start with the S&P 500. So let's grab that. And bear with me a second here, get my numbers right. There we go. Okay, so the S&P 500. If we look at the S&P, if you remember on Friday, we had the big down day, volume expands, big sell-off, right? We did a lot of damage, and we talked about this a little bit last night. We did a lot of damage in that, we were waiting to see if this consolidation here would lead to a further push to finish off some of these bullish structures that were in place, right? ABCD structure, it only needed about 15 more points or so, but it didn't get it. And it didn't move up there, and it didn't finish it off. And you'd like to see that happen if you're a bull, right? Because that says, hey, they take it up to where it ought to go, and then they consolidate. Well, they consolidated first. They couldn't quite get it going. They tested down a couple times here and there. That test was a nice reversal, got us up a little higher. This one was probing on the way down. Finally, the breakdown bar here on Friday off the employment news and really off this interest rate fear and the push up in the dollar, right? Because the dollar is really the issue. Because if you remember, the dollar hurt the earnings in the first quarter. I am sure if this dollar continues higher, it's going to hurt the earnings in the second quarter. Even if it doesn't, it's going to be the excuse. And so that is kind of that picture and why we're doing what we're doing. So what did we do today? Now that we've kind of worked our way around to the today, well, we do an inside day, right? Inside days really don't tell you anything, except for when you have a bar down like this and you do a little weak bounce inside of it, kind of doesn't make you feel so good, right? So if you're a bull, this is really not what you wanted to see. What you wanted to see was go lower and then turn around and close higher. It's not what you got. NASDAQ looks the same, right? NASDAQ almost gets lower, but not quite. Little weak bounce inside. Doesn't really do anything for the charts and doesn't really tell you much outside of what we already know. And then we look at the NDX inside. Same thing, less volume. Picture's the same. Look at the Russell. Inside bar, the volume's weaker. Gets a nice little bounce. It's not probably going anywhere. Now, the pictures outside of the S&P look better from the perspective of what they're doing. They're doing retest, regenerates off these prior swing point highs. That's the Russell. And if you come back here, and I'll do the NASDAQ one more time, the NASDAQ has a long way to go to get back. And if you go to the NDX, it's not as far, but that would be the test. I suspect if this thing does what it should do, you're going to see this thing come all the way back here now and do that retest regen. That would probably be the ideal place. That would be the ideal setup for someone that wanted to be bullish. because you come all the way back after more than 6 bars, probabilities are pretty high that at least it's going to bounce, if not actually start another leg up. So looking at the indexes, you know, they're not screaming buy here, shall we say it that way. So let's move to other things right after these messages.
Learn how to trade with the Trade with LA service provided to you by TA Today. This service includes daily portfolio and comments that are emailed to you before the market opens each morning. We provide a daily view of the markets and a model portfolio you can follow even if you work another job. Every weekend, LA records his weekend broadcasts that gives you a synopsis of the week and a prognosis of coming weeks. You will also have access to our Teach and Trade room, where LA provides day trades and teaches neoclassical concepts throughout the trading day. To get started, go to our homepage and click Trade with LA.
All right, so welcome back here. You know, at the beginning of the show, we talked about the dollar. And the dollar has made a huge gap up, a little doji type move today, really not doing anything. It did go over back under, less volume. That's not an extended move, it's just an over under. I think it's going to try to pull back into this gap a little bit tomorrow. That could help out gold, maybe help out the equity markets as well. But this dollar looks pretty strong, and this move off this consolidation, it was a pretty long consolidation considering the move that came before this. And so when you see that, right, I think it's going to have a hard time coming back down and then also breaking back down. So when I look at the dollar, you know, the dollar says, hey, I want to go higher, and if the dollar wants to go higher, that's going to make it pretty tough on these markets. Here's that spike up. You can see it more clearly here on the weekly. It's up there at the top. Volume was expanding last week. That's going to be a tough way for these markets, or it's going to be a tough thing for these markets with the dollar soaring. Now, a strong dollar is going to be tough on all of the equity markets, the commodity markets. And if I look at the oil market, you know, the oil market is actually consolidating. The thing that the oil market isn't doing is moving higher, and it's set up a couple swing point lows now here at the lows. And so as this thing builds out, there's the potential that we're going to see these swing point lows get broken, right? Which would lead to a faster move to come down here and test these lows again, potentially this area right here. And so, you know, I wouldn't get too excited about oil until you get one more test down here at the bottom, more than likely. Now, I could get excited if oil wanted to go up and break these highs because there's two of them. But you know, if it trades out, you know, longer period of time, and then breaks through here, then you'll get a break on multiple time frames, and that would look a lot better. So for right now, you know, oil is just kind of no man's land, building out a base, and we'll see whether it's a consolidation base before it goes lower, or if it actually has put in its bottom and is going to work higher. So we'll have to see how that works out. But right now, I don't think oil is very interesting. What is interesting is the gold market. And the gold market is just getting creamed. So the gold market comes down, breaks two swing point lows, does it with volume. It's testing on the weekly as well, coming down after those lows. Gold is going to continue lower. It's not going up. And if you look at it from the perspective of the gold stocks, they're getting hammered. Let's take a look at those. Here we go, the GDX. You can see another extension down today, big volume on Friday, more volume today. These had done a lot better than gold, so now they're giving it up worse, and they're coming all the way back to test these lows, that last support zone. And if we look at those on a weekly, you have kind of the same scenario. You can see how far up they push compared to gold. You got volume at the lows, and you're only about halfway there. So that's going to be an ugly market for a while. If you're looking to short something, you know, there's some there's some instruments here that are going goofy. I mean, look at the moves. 22.7% on dust on Friday. Tack on another 10.5% today. So you just did a 33% move in this particular instrument. So if you're paying attention to things when it broke, right here, right there, right, big move up. And if we go back, let's go back to the GDX, because I think the GDX is the underlying, is the one I would watch. Yeah, it was actually here on the Friday before you got it. So you would have had to, kind of hold your nose and jump in if you were waiting on the GDX versus the leveraged instruments. If we look elsewhere, part of that dollar strength, of course, is the weakness in the euro, and the euro can't even begin to get going. If we go overseas to the overseas markets and look at those, Europe is the strength, and we'll start there. The DAX is up at highs, the FTSE at highs, just coming off a little bit, and the French market's just coming off a little bit as well. So those all pretty much hanging at the highs. But if you start walking around the rest of the world, it's starting to look different again. Here's the all ordinaries. They're coming off. They're coming back into this big bar up, this big wide price spread bar. I wouldn't be surprised to see them get all the way to the bottom of it. If I look at India, India's starting to come off again. They did their interest rate cut, got the pop up, right? And that reversed, came right back down. The volume there compared to this bar here was about the same, just a little bit higher, got over it, back under it. This thing's going to come all the way back down into these lows, into this area, and potentially even lower. I think they've had their run, and what a run it's been. They've gone, 10,000 points higher over the last year. So, these wild moves we've seen off of the various central bank action, they're extreme. And extreme moves lead to more extreme moves in terms of volatility. And I suspect we're going to see that more and more this year compared to what we have seen. If we keep walking around the world, Brazil selling off more. That one's coming back down again. If we walk up to our friends in Toronto, they're starting to come back down again as well. And if we go over to Asia, the 8 shares, they got a big bounce last night, but they're at the lows of their range for that bounce. The same thing here with Hong Kong, was under the lows. If I look at Korea, that's one that looks pretty good. Maybe they're finally, they just finished off pretty much an ABCD structure on the way up on the weekly. This looks like it's probably done what it wants to and is going to fall back a little bit. Japan is the one that's been holding up there at the highs. Now the volume on this high, it exceeded it. I don't know what it did on volume. I haven't got them yet, but this does look pretty good still, and it's overextended again in terms of its ABCD structure. That's probably going to be a buy on the way back. Indonesia kind of hanging at the top, and Taipei, the Taiwanese market, starting to fade back in. But it was a nice run up after they came back from their vacation, their New Year's celebration. I suspect as they get back into this area here, they're gonna turn around and get some support and try to push back up. So overseas markets starting to fade a little bit, not looking nearly as strong. And so that kind of brings me to the final thoughts here for the evening. So let's take a look at those. So as we finish out the final thoughts here tonight, we've had one stock for a very long time that has moved this market, and it's Apple. And the blue line here is an intraday. Today this is a one-day chart looking at Apple compared to the NDX. And you can see that at the beginning of the day here, neither one of them was doing that much, a little bit of a divergence. But once Apple began to push on the release of the news with respect to the iWatch, which was the big event for them, as they hyped it up, right? We got a big run up in Apple. That pulled the NDX up. NDX got up towards the recent breakdown swing point low. Matter of fact, if I pull it over 2 days, you'll be able to see it. So the breakdown, actually you have to go back a little bit farther. Let me go just a little bit farther and so we can actually see it. So you can see right here, let me draw that line in for you, because we were trading off of this today. This line here, that was essentially, and actually this low is right there. It came up and it touched into that low. Now, for those of you that watch me long enough, you know that that's, on a 60-minute chart, that happened to be a retest, regenerate bearish on the NDX. And as it came up and kissed it, benefit of Apple, right? Apple pulls it up, brings it right up into there, and then Apple sells off. This thing comes right back down. And so, let me bring it back in now. The point of this is that so goes Apple, so goes the market. If Apple can't push higher, then I suspect this market is going to have a difficult time. And I'm talking about the NDX and the NASDAQ. And if the NASDAQ, being the strongest, can't push higher, I suspect the whole market's going to try to come down some more. Let's see if Apple can push higher. And so to answer that question, we pull Apple up. And we look at it here on the TA Today charts. And what we're really looking at is, where is any kind of significant formations, right, that we can key on that will tell us something. The most significant thing you can see, not only in Apple, but in a lot of these stocks, is there's a long way to go to get back to the green, right? That's where TA Today charts tell you you should expect buyers. But that's, that's what, about 119 to 114, somewhere in that range. We're up at 127 still. So you could drop $8 pretty quick. So the next key thing is there anything up here? And there is. If we look at this bar, the Feb 26 bar had 90.7 million shares on it. We did 88 million today. So we hit underneath that low on a little less volume, right? Flipped around, closed within it. Given that it's as close as it is, this thing actually could come down and test again and test that low again tomorrow. And if it does and drips under it, then we'll have some sort of profit taking spill in. On the flip side of it, the good thing is that it actually held with slightly less volume on the test. And if I'm strictly looking at the charts, that says that this thing's going to potentially try to push back up and test this high from Feb 26. That high is, again, it's 90 million. The high is 130.87. So Apple, I'd watch it in the morning. If it actually starts to spill lower in the morning, then I think the whole NDX goes with it. But if Apple does hold, then we're going to probably see it go back up and try to test that area one more time. And so I think as Apple goes, so goes the market. They used to say that about General Electric. I think this is the monster in the room anymore. And if you don't have this chart up every day, I'm not sure what you're doing, because you have to watch where Apple's going. And not only that, it's fixing to be in the Dow. So you got huge weighting in the NDX, 20+%. You've got weighting now in the S&P that's, I'd have to look it up, but it's probably on the order of about 3 to 4%. And you've got weighting in the Dow now, which will not be that much. It will probably be somewhere around the 6 or 7% mark. All three indexes, it can move them all. So goes Apple, so goes the market. All right, so my thought here to close with is that it's not clear. We had inside days pretty much across the board. Weak bounce. It's hard to short this market. You know that, I know that. These weak bounces just seem to keep going. But if I had to put my bets on things right now, given the way we came off Friday, given the dearth of news flow, it just looks to me like this thing's going to try to drift in this week. And I wouldn't be surprised to see some more profit taking set in as a result of it. All right, have yourself a great night. Thanks for joining me. Until next time, take care. I'm LA. This is, and it was, your daily NeoTA wrap. Have a great night, folks, and I'll see you next time. Good night.